Hello, guys, and welcome back to Professor Explain's channel. We now can say that Donald Trump won the 2024 US presidential election. His win could significantly impact the United States, Europe, and the global economy through a variety of channels, ranging from trade policies to military alliances and overall economic strategies. His administration could potentially bring specific benefits across US, European, and global domains. Trump's focus on strengthening the US economy, reducing geopolitical tensions, and reevaluating international alliances may affect the world in various ways. Here are several potential ways in which a Trump re election might benefit these areas. Regarding economic stimulation via tax cuts and deregulation, Trump is expected to reintroduce tax cuts for corporations and continue deregulation across sectors. This could spur domestic growth and incentivize investments, potentially benefiting the broader global economy by stimulating import demand. Regarding military spending and NATO, Trump previously questioned NATO commitments. Still, his policy focuses on increased defense spending that could indirectly bolster NATO, as European countries may invest more in defense. This shared focus could stabilize Western military alliances, especially in the context of current geopolitical tensions. Reduced trade deficits and global trade balance. Trump's stance on renegotiating trade agreements could reduce U.S. trade deficits, especially with China and the EU. Lower trade deficits could potentially strengthen the dollar and improve global trade balances, benefiting economies that trade heavily with the US. There is potential for closer US EU trade cooperation. While Trump's tariffs on European goods would likely strain relations initially, it could encourage the EU to negotiate and align more closely with US economic and technological policies, particularly as both seek independence from Chinese manufacturing. Decreased geopolitical tensions with Russia could be expected. Trump has often promoted a more conciliatory stance with Russia, which could ease tensions and promote stability in Eastern Europe, reducing risks for EU economies heavily affected by regional security threats. Improved relations with Russia and a less aggressive stance on China could reduce global military tensions, especially in hotspots like Eastern Europe and the South China Sea. Regarding energy policy impact, Trump's focus on U.S. energy independence, mainly through fossil fuel production, could lower global energy prices, aiding European and developing economies reliant on oil imports. A stable or lower energy price environment would benefit industrial sectors globally. Regarding relations with BRICS countries, Trump's transactional approach could open avenues for trade with BRICS countries, balancing U.S. relations across emerging economies and promoting diversification in U.S. supply chains. By maintaining or enhancing tariffs on China, Trump's policies could encourage some global manufacturers to shift production out of China, benefiting U.S. allies like India and Vietnam and reducing dependency on China centric supply chains. Regarding the financial sector stimulus, Trump's administration might push for looser monetary policies, including potential rate cuts, which could reduce borrowing costs globally and foster capital flow into markets worldwide. Tax incentives for businesses could attract more foreign capital to the US, positively impacting global investors, including European companies seeking a stable return on investment. A firm dollar policy under Trump could lower inflationary pressures globally, making imports more affordable and stabilizing the global economy against inflation-driven recessions. Trump's support for U.S. oil, gas, and coal industries may enhance the country's energy independence while also boosting exports to Europe and Asia. This could contribute to a stable global energy market and reduce dependence on Middle Eastern sources. The Trump administration may prioritize immigration reforms for workforce safety to create a more skilled workforce and address labor shortages in sectors critical to U.S. growth. With a stable U.S. economy, global markets are less likely to face recession risks. Regarding Trump's win's impact on a recession, there could be several policies implemented. First, fiscal stimulus focused on infrastructure. Trump has shown interest in infrastructure projects which could provide immediate job growth and stimulate economic activity. Trump's deregulatory and tax policies could foster conditions for a stronger domestic economy, bolstering global investor confidence and reducing recessionary pressures worldwide. Second, enhanced U.S. investment climate. Lower corporate taxes and regulatory cuts may keep the U.S. attractive to global investors, potentially preventing or delaying a recession by spurring business expansion. Third, improved energy self-sufficiency. Lower energy costs due to domestic production could help prevent inflation spikes, reducing recession risks in both the US and globally. Fourth, stabilize supply chains. By promoting reshoring and diversifying supply chains, the Trump administration could create more resilient economic systems to withstand global disruptions, reducing recession vulnerabilities. Fifth, focus on export growth. By negotiating favorable trade deals, Trump could stimulate U.S. export growth, providing a more balanced economy that is less prone to recessionary downturns. Sixth, lower defense spending and debt management. Reduced international defense spending could help manage U.S. debt, potentially creating a more sustainable fiscal environment and reducing recession risks linked to excessive national debt. Seventh, increase consumer and business confidence. Trump's focus on economic nationalism could boost confidence among American consumers and companies, potentially fostering investment and spending that drives economic growth. Eighth, focus on domestic manufacturing. By prioritizing U.S. manufacturing, Trump's policies could strengthen domestic production, creating a buffer for the U.S. economy against global supply chain disruptions and supporting a more self sustaining growth model. In conclusion, a Trump reelection could likely bring a mix of fiscal stimulus, trade renegotiations, and a focus on energy independence that could foster U.S. economic growth and potentially help stabilize the global economy through demand stimulation and energy cost reductions. However, there are risks in terms of potential trade conflicts, especially with China and the EU, that could create uncertainty. Nonetheless, Trump's business centric policies could support economic recovery, especially if they enhance U.S. production and create more robust trade links with emerging economies. Trump's policies could support a more robust global economy, reducing recession risks while fostering economic resilience across the US, Europe, and beyond.
Thank you for watching. Keep track for more videos soon. Please like, share, and don't forget to subscribe and click that bell button down below.